Hello and welcome to the results overview for Bajaj Finance for Q3 of FY19. We will look at the salient points on the company's performance in this quarter. Note that this is an abridged version of the results analysis. For a detailed analysis, please visit investing.amitkirti.com. Let us start with the numbers for revenue and expenses. In Q3 FY19, the revenue grew at about 48% to 4,995 crores, which is amazing. The expenses grew at a relatively lower rate of 45%. Let us look at the historical growth in the revenues. The graph on the right hand side shows the growth in revenues for the past 6 quarters. Q3 FY19 has turned out to be the best quarter as far as revenue growth is concerned. The least growth was seen in Q3 FY18 when it grew by about 31%. Even with such a large base built over the past 4 to 5 years, the company manages to grow at a rate more than 35%. That is indeed an achievement. Let us now look at profit and EPS numbers. The graph on the left hand side shows the profit growth in Q3 FY19. The profits grew at a staggering rate of 53.5% to 1,059 crores. The graph in the middle shows the growth in non-annualized EPS for Q3. As expected, EPS growth mimics the growth of profits and came in at 53.3%. I was curious to find out the growth in profits over the past few quarters. Hence, I collated the numbers, and the graph on the right hand side shows the growth in profit over the past 6 quarters. And the numbers are simply amazing. The past 4 quarters have seen more than 50% growth in profits. Q3 of FY18 seems to have had some issue with both its revenue and profit growth, and both were less. Other than that, it has been a great ride for the company. With respect to expenses incurred by the company, as expected, finance cost is the major expense for the company. Since it is in the business of lending money, it has to borrow money from different sources and it needs to pay interest on the borrowed sum. The graph on the left hand side shows the finance costs, which grew at the rate of 51.5%. The graph on the right hand side shows the growth in the rest of the expenses. Employee expense grew at 31%, which is acceptable compared to the revenue growth. Other expenses growth was modest at 29%. The provisioning numbers were the ones that came in as a surprise. A 63% growth in provisioning was not expected. Rajiv Jain informed that this was due to IL&FS account turning into an NPA in this quarter. And I believe this would have triggered higher provisioning. I am hoping that this is one-time provisioning for this account and we do not see it spread over many quarters. In the same breath, let us look at the NPA numbers. Due to the IL&FS account moving into NPA, there was a rise in NPA as well. The graph on the left hand side shows the gross NPA, and it was higher than normal at 1.55% and net NPA at 0.62%. The graph on the right hand side shows the historical value for the net NPA for Q3 in comparison with Q2, as well as all the previous 7 financial years. Clearly, Q3 FY19 stands out as the worst quarter for the company. Let us now look at the company footprint with respect to branches as well as presence in third-party stores. The graph on the left hand side shows the branches in rural and urban areas for FY15 till Q3 of FY19. In FY15, the company had 161 branches in urban areas and 232 branches in rural areas. By Q3 of FY19, The number of branches in both the centers are more or less equal to 869 versus 867 branches. The graph on the right hand side shows the growth in Bajaj Finance presence in third party stores. For example, in consumer durable stores like Chroma, etc. The graph shows the aggregate numbers for both rural and urban presence. With every quarter, the company is spreading itself to many stores. Both these graphs are the reason why the company is able to show the huge growth in AUM, disbursements, and revenue growths. Moving on to the assets under management, the graph on the left shows the AUM numbers for 2 quarters in FY19 as well as for the past 5 financial years. The company has seen a rapid rise in AUM in Q2. It crossed the 1 lakh crore and it now stands at 1.09 lakh crores. The graph on the right hand side shows the AUM growth in percentage terms. As we can see, the company has had an impressive growth over the past 5 years. A higher AUM growth results in higher disbursements, which leads to higher revenues, and when the NIM is higher, this gets translated to higher profits. Let us now look at the cost of funds. The margins for the company depends on the cost of funds. From the graph on the left hand side, it is clear that over the years, the cost of fund has gone down. However, one should also be cognizant to the fact that the benchmark rates have fallen as well. So it is natural for the cost of funds to come down. The efficiency of the management would get reflected in the quantum of this drop. This can be judged from the graph on the right hand side, which shows the borrowing profile of or the source of funds. Bajaj Finance currently has 5 sources for funds, that is banks, NCD, subordinate debt, which are the unsecured high interest loans, short-term borrowings, and deposits. I would want you to concentrate on 2 terms, which are the deposits that are shown in top of the column chart and the bank lending, which is shown in the bottom of the chart. Over the past 5 years, the company has successfully managed to reduce its bank borrowings, that is the bar in red color, and it has successfully managed to increase the deposits, which is shown in light green color at the top. Now correlate this with the drop in cost of funds from the graph on the left. You will see a direct one-to-one mapping. As the company has decreased its dependence on bank borrowing and increased its dependence on retail deposit, the cost of funds have decreased proportionately. This positive correlation is a healthy sign indeed. Let us now look at the NPA numbers. The graph on the left hand side shows the net NPA for the company for Q3 and for the past 5 years as well. We can note that the net NPA has been lower for many years now. However, in Q3, we see an increase in NPA to 0.62%. This could be due to the IL and FS account turning into NPA. The net NPA excludes the IL and FS account amounts to 0.45. The graph on the right hand side shows the segment-wise net NPA. The major portion of NPA in absolute terms as well as percentage terms is due to the B2B auto finance. All other seem to be within the manageable limits. We can also see the mortgages shooting up to 0.96% in the graph on the right hand side. This is again due to the IL and FS account. Let us now look at return on equity and return on assets. The graph on the left shows the non-annualized 9 months return on equity, and it has surpassed the FY18 values and well on its way to show more than 20% ROE. These are a great set of numbers for ROE. The graph on the right hand side shows the return on assets, but these are annualized numbers. The numbers for FY18 and Q3 FY19 are very similar. Again, very good set of numbers for ROA. Let us also look at the capital adequacy numbers. This is an important metric for shareholders. RBI stipulates that the capital adequacy ratio values for Tier 1 capital and combined values. For Tier 1 capital, the norm that is set by RBI is about 10%. Bajaj Finance seems to have an internal trigger point of about 14%. As soon as the Tier 1 capital drops to around 14%, I have seen that the company comes to the equity market for fresh funds. As of Q3 FY19, the number stands at 16.8% for Tier 1. The pace at which the company is growing its assets, the retained earnings may not be sufficient to maintain the Tier 1 capital ratio, and hence, I think in about 3 to 4 quarters, the company may see an equity dilution again. The graph on the right hand side shows the combined Tier 1 and Tier 2 capital adequacy ratios. This combined capital adequacy ratio, which stands at around 21.38%. As per regulatory norms, I believe combined capital adequacy ratio should be more than 15%. And the company is way above it right now. Let us wrap the discussion with a quick summary. Revenue growth at 48% was simply excellent. PAT and EPS growth at close to 53% was simply amazing. The AUM growth at about 30% was again great. The NPAs were a tad disappointment due to the IL and FS account slipping into NPA. Otherwise, the rest of the businesses were really doing well and were able to maintain their NPA numbers. Overall, this was an excellent quarter and great set of numbers for Bajaj Finance. I hope that the company is able to maintain this growth and profitability in the forthcoming quarters as well. Please note that this is an abridged version of the analysis. Please visit http://investing.amitkirti.com for detailed analysis of Bajaj Finance results. The detailed analysis further covers details on the partnership with RBL and Mobikwik. We will also look at customer growth numbers. We will also look at some of the numbers for Bajaj Housing Finance, the subsidiary of Bajaj Finance, which may turn out to be a huge company of its own in future. Thanks for listening.